we'll begin with cash flow statement. Okay, so to start with the basic things we'll see. Statement of cash flows is intended to help users, given with answers, of course, intended to help users for financial statement. We see the firm's liquidity, solvency, and which one? Financial flexibility. What is liquidity? Ability to generate cash. Solvency is nothing but ability to pay off your dues, debts, financing obligations, all those things. Financial flexibility is to shift between debt to equity or equity to preferred capital, like that. Question number 2. We classify the activity into operating activity, financing activity, investment activity, but not what? There is no concept called as equity activity. There is no concept called as equity activity. Which of the following should be classified as an operating activity? Which one should be classified as operating activity? Cash dividend is financing activity. Additional equipment is investment activity. Decrease in accounts payable, we adjust in what? Operating activity. We adjust in operating activity. What is the order? Operating, investing, financing. Operating, investing, and what? Financing. When using the cash statement of cash flows to evaluate the company's continuing solvency, the most important factor is continuing solvency. Whether the firm will be solvent in the future or not. So if the cash from operating activity is positive, the company will continue for a longer run. It's not present solvency. Future will it be solvent or not? We have a positive cash flow. We have a positive cash flow. So the most important factor for considering cash is cash from operating activity. On November 15th, we purchased 30,000 treasury bonds with a maturity date of January 15th. November 15th to January 31st. See, cash and cash equivalents will have what? 3 months maturity, less than 3 months maturity. So December, January, less than 3 months maturity, it will be called as what? Cash and cash equivalents. It is part of which one? Cash and cash equivalents. If you make some investment fixed deposit bonds having less than 3 months or less than 3 months what? Thing will be called as what? Cash and cash equivalent. A financial statement includes the following item: net income, depreciation, operating activity, financing activity. What financial statement is this? Cash flow. Cash flow statement only we have what? Operating activity, financing activity, and which one? Investing activity and all. Because from based on net income, we adjust which one? Depreciation, cash from operating and all, we find out that is statement of cash flow. Question number 8. Which one of the following items could be identified as cash flow statement prepared using what? Indirect method. We adjust for non-operating items, non-cash items, etc. So depreciation related to which one? Building or equipment. Non-cash item we add. In a statement of cash flows, the payment of common share dividend. Dividend paid will appear in which activity? Financing activity. We use the money. We use the money. We pay the money. Which one of the following transactions should be classified as financing activity? Buying back your own equity shares will be called as what? Financing activity. Impact of credit card interest incurred and paid. Interest is operating activity. Payment of interest will decrease your net income. Payment of interest will decrease your net income, which will decrease your retained earnings. Which will decrease your retained earnings. Equity will reduce. Equity will reduce, and it is an operating outflow. Payment of interest is an operating outflow. Of course, net income reduce, retained earnings will reduce. When preparing cash flows, companies are required to report separately operating cash flows except operating cash flows. Cash collected from customers and operating cash. Cash not in paid as a financing cash. Interest received, interest paid. Okay. All these are operating only. So which is an exception? B. Number 13. Which is not a financing activity. Which is not a financing activity. Income tax refund is an operating activity. Income tax refund is an operating activity, not a financing activity. We are not doing any reconciliation. Indirect method, we are not doing any reconciliation. Reconciliation of net income operating cash flow is not presented while using direct method. Okay. No. Accounting standards covering statement of cash flows encourage use of indirect method. No, no such things are there. Direct method like cash from operating activity includes disclosing major classes of receipts and what payments. That is the correct one. Question number 14. They have given net income. They ask you to find out net increase of cash capital. This is plus amortization of intangible plus decrease in accounts receivable. We collect money plus increase in inventory. We minus pay. Increase in current assets will reduce. Increase in accounts payable like inflow. Increase in planned assets we pay minus. Increase in contributing capital we get money. Decrease in short-term notes payable. Decrease in short-term notes payable causes what? Outflow of cash. Depreciation non-cash expense, let us add. Amortization non-cash expense, let us add. Decrease in receivable, we collect money, we add. Increase in inventory, we purchase, so minus. Increase in accounts payable, we get money, we add. Increase in planned assets, minus. Increase in contributed capital, plus. Decrease in short-term note payable, minus. 11,000 is correct. Question number 16. Investing activities except interest not a investing activity. Number 17. In preparing statement of cash flows, items to be included in net cash flow from operating activity. Items to be included in determining net cash from operating. Sale of equipment is not a operating activity, that is investment activity. This is financing activity. Amortization of bond premium be added back. Purchase of treasury stock is financing activity. 18th. Dividends paid to the company shareholders would be shown in the statement of cash flows as dividend paid to the shareholders will be shown as cash flows from which activity? So cash outflow from financing activity. Cash outflow from which activity? Financing activity. So that is retyped wrongly. Here the answer. The sale of available for sale security. Sale of available for sale security should be accounted in statement of cash flows as an investment activity. You are selling investment. You are selling investment. Question number 20. A reader of statement of cash flows wishes to analyze major classes of receipts and cash payment. Which are the method of reporting cash flow from operating activity will supply the information? Direct method. Direct method only will show the major classes of cash receipts and which one? Receipts minus payment, we do it under which method? Operating activity, direct method. Indirect method, we do the reverse of thing. Answer is what? C. Which are the following items specifically included in statement of cash flows? Yes. Purchase a building by a market seller, acquisition of assets by means of conversion of debt. All these are like non-cash items. Only this has which one? Cash flow. For a manufacturing firm, which one would be the cash outflows from which activity? Financing activity. Financing activity they ask. Issuing shares is financing activity. Issuing shares is financing activity. Interest is an operating activity. Interest is an operating activity. They ask you to find out cash from operating activity. Net income, depreciation expense you will add. Increase in accounts payable, we get money, and increase in accounts receivable, increase in current assets minus, increase in deferred tax liability. Increase in deferred tax liability. How much? 16 tax. How much? I repeat, depreciation expense non-cash add, increase in accounts payable, current liability increases you add, current asset increases minus, current liability increases you add. So what is the final answer? The cash balance is given, balance sheets are given for 2 years. Here, closing balance and opening balance is given to us. Marketable securities consists of money market funds, commercial paper, and US Treasury bills. All at a maturity of how many months? 3 months or less. What is the net income of the company? 9,900. There is no fixed asset, no investing or financing activity. Using the indirect method of preparing cash flow statement, what is the balance in which one? Marketable security they ask for. What is the net income? With that, let us go for indirect approach. What is net income? Let us adjust one by one. Prepaid expenses, opening balance to closing balance, increased or decreased? 1,500 to 1,200. Minus 700. Increase in current assets. Increase in. This is opening balance, this is closing balance. So increase in current assets, you will minus. With that respective place, minus 700. This one, accounts receivable increased, so minus 1,000. Then this one, accounts decreased, so we have to add plus 1,000. Then accounts payable increased, so we have to add 300. Payables decreased, so minus 500. Inventory, no change, no adjustment. We'll see marketable security. Cash balance increase here. So do this net income, adjust all these things. Net income plus 0 minus 500 plus 300 plus 1,000 minus 700 2000 clear. Okay. What is the opening balance of cash?
Balance 800.
Plus 800. Plus 800. Minus what is the closing balance? 1000.
9,000.
9000. 9000. Okay. 800 minus 1000. 1800 இருக்கு. So 1800 இருக்கு. Clear? So 7000 plus 1800, it will give us how much? 9000. Balance in cash is 1800. 7200 opening balance plus 1800 will give us year-end marketable security. Year-end marketable security. Shortcut limit. 2000 இருக்கும். Opening balance 800 we had. Closing balance 1000 we are having, means there is a difference of how much? 1800 that would have been used for buying marketable security. So opening balance plus 1800 will give us what? The closing balance of marketable security, how much? 9000. There is a lengthy explanation given. That is not required. Normal method we can. Question number 3 part. Major classes of operating receipts and operating payments. We call it as which one? Direct method. We call it as which one? Direct method. Calculate cash from operating activity using indirect method. Which one of the following items should be added back? Depreciation. Non-cash expense we'll add back. Take this 15 lakhs. Cash dividend is a non-operating. No, it's a net income only given. This should not be adjusted. It is not a difference between opening and closing retained earnings. Net income is given. Work in progress increased. Minus gain on sale of equipment, non-operating income, eliminator. So work out பண்ணி சொல்லுங்க. Why are we not adjusting cash dividend paid? We are not starting with the difference between opening and closing retained earnings. We start with which one? Net income. Net income is before adjusting which one? Cash dividend paid to them. Cash dividend paid to them. So amortization expense non-cash we add back. Increase in current assets minus gain on sale of equipment, non-operating income, non-operating gain minus. So we get how much? 13 lakhs. Indirect method, depreciation expense will be assets are given, liabilities are given. The FAME's payout ratio is what? 20% during the current year. Net cash provided by the operation என்ன கொடுத்து Look at this. It is not a balance sheet. A comparison of the company's year-end balance sheet to the prior year balance sheet shows as follows. This is not a balance sheet. This is a change. What is a change in retained earnings? What is the change in retained earnings? 2,200, which means it is current year change in retained earnings. It is a current year change in retained earnings. The firm is paying how much percentage? The firm is paying 20%. Na? Net income would have been what? 80%. Otherwise, retained earnings payout is 20%, means retained is what? 80%. That is how much? 2,200. What would have been the net income? What would have been the net income? 2,200. If this is 80%, what is 100? 2,200. If it is 80, what is 100? What is the net income? 2,000. That is your net income. But they ask you to find out cash from operating activity. Okay. Accounts receivable increased. So what to do? Minus. 2,750 minus pannu. Inventory reduce ஆயிருக்கு. You will add. Okay, add 100. Accumulated depreciation changed, which means we charged. We'll add back. Accounts payable increased, so add back. Accruals, add back. Hello, that is the answer. I repeat, 80% retained is 2,200 means what would have been the net income? So 2,200 is 80% now. What is 100%? 2,750. Accounts receivable increased, so we reduce. Increase in current assets. Inventory decreased, so we add it. Accumulated depreciation is a non-cash expense, we add back. Accounts payable increased, we add back. Accruals increased, we add back. We are not bothered about long-term note, they are non-current liability. Financing activity. Even gross fixed assets increased, there is a investment activity. Adjust this, you get how much? 3,450. This is what they would have done. Question number 8. With respect to statement of cash flows, all of the following should be included in net income from operating activity except purchase of land and building in exchange for long-term note. That is not an activity at all. Carlson Company has the following payments. They ask you to find out operating activity. What will come in operating activity? Only interest paid will come in operating activity. Dividend is a financing activity. Equipment is which one? Fixed assets. Okay, so investment activity. So what will come in operating activity? Only interest will come in operating activity. Question number 10. We are using statement of cash flows using indirect method. Opening balance of equipment how much? 2,97,500. Closing balance is 3,04,000. Depreciation expense under 22,400. During the year, company sold an equipment for 40,000, resulting in a gain of how much? 27,600. Now they are bothered about. They are asking you to find out. They are asking you to find out which one. Purchase of equipment. Maybe we can do it in ledger format. Any format we can work out. We can do that. What is to balance brought down? What is the opening balance? 2,95,700. Okay. By depreciation. What is the depreciation charge in the current year given? 22,400. Then by cash. Sale of equipment. What is the sale of equipment? Sale of equipment, how much is given? 40,000. Is it a profit or loss? For profit on sale, it will come in the debit side. To profit on sale. What is the profit on sale? 40,000 sold for 22,400. It will be 17,600. 40,000. No. Gain is directly given. Okay, gain is directly given. What is the gain given directly? 21,600 is given to us, and the closing balance also given to us. By balance carried down. What is the closing balance given? 3,04,000. Tally this, you will get as a balancing figure purchase of asset. The gap will be nothing but purchase of asset. 49,100. Opening balance, profit on sale. We have depreciation, sale price, receipt, and closing balance. The balancing for becomes so much. Profit on sale. Profit on sale. Question number 11. A company has purchased an asset with 10 years useful life. It will use the accelerated depreciation method for tax purposes. It will use straight line method because this method is believed to reflect usage of the asset based on economic life. Accelerated method for tax purposes. SLM for what? Accounting method. While applying indirect method for calculating net operating cash flows using financial statement for tax purposes rather than accounting purpose will result in cash flow statement is prepared based on which one? Net profit for tax purposes, add back which one? Depreciation for tax purposes. It will cost the same thing. If depreciation is more, net profit would have come for tax purpose. 3 lakhs we charged depreciation for tax purpose. What is the profit after tax? 2 lakhs. This is for tax purpose. For accounting purpose, we used SLM method of depreciation where we charged 1,50,000 only. What would have been the PAT? 3,50,000. Now, when you work out cash from operating activity, when you start the tax base, what will you do? 2 lakhs. We'll add back depreciation 3 lakhs. What will be the total? 5 lakhs. When you go with accounting base, what is the profit after tax? 3.5 lakhs plus what? 1.5 lakhs. It will result in what? Same. So it will not cause any what? No effect on cash flow amounts. Because PAT gets altered according to the depreciation. So when we add back depreciation, as per tax record with 2 lakhs, it is 5 lakhs. As per accounting record profit with depreciation, it will give us what? Same. So there will be no effect on which one? Cash flow amount. No effect on which one? Cash flow amount. Net income for calculating operating activity using indirect method for preparing operating activity except caterer. Except they ask. Which one you will not consider in the caterer? This is which activity? Investment activity. That is also non-cash item. While calculating net cash from operating activity, all of the following information will be added back and subtracted to net income except look at from net income. Net income is before dividend or after dividend? How do you work out net income? We work out income statement. Income minus expenses minus tax will give us what? Net income. This is before adjusting the dividend. So no need to add dividend. No need to add dividend. That is what. If you start CFO, cash from operating activity, by comparing opening and closing retained earnings, then you will add back dividend. Because opening and closing retained earnings is after adjusting what? Dividend. If you start with net income, we will not add back what? Dividend. We will not add back. Look at this. Net income கொடுத்திருக்காங்க. They ask you to work out operating activity. Depreciation on fixed assets you will add. Gain on sale of land you will eliminate. Then increase in accounts payable. Increase in accounts payable and dividends you adjust. So will not resist. Increase in accounts payable we will add. What is the net answer? Dividend paid on preferred stock we will not adjust because what is given to us? Net income is given to us. Is there a difference between opening and closing balance? Retained earning கொடுத்திருந்தாங்கன்னா you could have adjusted dividend. Net income is given. Net income is given. They ask you to find out cash from operating activity. So net income 30,000 எடுத்துக்கலாம். Then accounts receivable last year to current year. This is last year, this is current year. Increase ஆயிருக்கு. Accounts receivable increase ஆயிருந்தா minus 2000, minus 2000. Inventory reduced, so plus 3000. Decrease in current assets we add. Prepaid expenses increased, so minus. Increase in current assets minus 1000, minus 1000. Accounts payable increased, we get more money. Increase in current liability plus how much? 5000. Long term debt will not affect. So 30,000 minus 2000 plus 3000 minus 1000 plus 5000. What is the answer? Answer is 35,000. 30 minus 2 plus 3 minus 1 plus 5 will give us what? 35,000. Long term debt will not affect your operating activity. While preparing indirect method of cash flow from operating activity, what adjustment is needed to net income because of increase during the period of prepaid expenses? Increase in current assets will reduce. Amortization we will what? Add. So what is the correct answer? B or D? Wait. It is amortization of bonds premium payable. That will be credited to P&L account. That will be credited to what? P&L account will reduce. We will reduce. So non-operating gain we will what? Reduce. Next.
Interest.
Garnet Company year-end income statement showing the following: revenue, selling expenses, interest expenses, gain on selling equipment, income tax expense, including long-term deferred tax expense கொடுத்திருக்காங்க, net income கொடுத்திருக்காங்க. Current assets increased by 1000, current liability increased by what? 1,50,000. Okay. What will be the operating activity? What will be the operating activity they ask? Try பண்ணுங்க. You have to start with net income. Depreciation expense, what will you do? You will add back. Gain on sale of equipment, you will reduce. Try to work out. See, okay. Deferred tax expense we transferred. Deferred tax expense we transferred means which we have not paid now, which we have not paid. So we will add back. We will add back that 30,000. Increase in current assets. Increase in current assets now. We'll minus. Increase in current assets will minus. Increase in current liability we will add. An answer. Repeat, add 2 lakhs non-cash expense. Eliminate because it's a non-operating income. Add because there is no cash outflow for that. Minus increase in current asset, money goes out. Increase in current liability, 1,50,000 you add. How much again? 8 lakhs, 3 lakh, 8 lakhs 17 adjustment. directly hit. 8 lakh 17 depreciation, 11 lakh 10,000 will come as the next part. Operating activity. Collection of goods sold to the customer will come. Security purchased for investment purpose, original cost, that will not come. Issue of company stocks totaling 10,000. We are working under direct method. Okay. This will not also come. Only the collection of goods sold to the customer will be which activity? Operating activity. We are not working, they are using which method? Direct method, the receipts minus payments method. So receipts like only the collection of goods sold to the customer will come. The most commonly used method for calculating report net flow of operating activities, which method? Indirect method. Because indirect method is simple to calculate. Otherwise, you have to analyze the total cash book and do it. Question number 20. The following items should be deducted from net income while determining what? Net cash flow from operating activity. This is what we had seen. Amortization of a premium on what? On a bond payable. We'll eliminate. Net income for the current year 82,000 is given. Old equipment costing 60,000. Carrying 53,000 was sold for a gain of how much? 10,000 to the company. New equipment was purchased for 1 lakh is given to us. They have given various information. We asked you to work out which activity? Operating activity. What is the net income given? 82,000. Let us start from that and work out. Try for it. First, complete this part and let us go for the next part. What is the net income given? Net income, how much is given? 82,000 given to us. Then, what is the gain on sale of equipment? Sold for how much? Minus 10,000. Eliminate the gain. Eliminate the gain. And accounts receivable formula. Last year to current year decrease. So what will you do? Add. Decrease in current assets. Decrease in which one? Accounts receivable. We'll add. How much we'll add? 1,000. Then inventories increased by 12,000. How much increased? 12,000 increased. Then equipment we have to check. Equipment we have to check. Accumulated depreciation on equipment we have to check. Okay. What is the accumulated depreciation opening balance? How much? 70,000. Closing balance? 83,000. 83,000 is the closing balance. Wait. There was one equipment sold. One equipment. What is the cost of the equipment? 60,000. Net carrying value? 53,000 means eliminate. accumulated depreciation on the sold asset. How much? 17,000. 60,000, okay, 7,000. Eliminate 7,000. So 70 minus 7, it should be how much? 63,000, but closing balance is 83,000 now. Difference is what? Depreciation. You would have charged depreciation. There is a balance in it. Otherwise, what was your opening balance? 70. We sold an asset having an accumulated depreciation of 7 now. How much should have been the balance? 63. But closing balance is 83, means we charge a current year depreciation of how much? 20,000. Let us add current year depreciation. What is the depreciation of the current year? 20,000. Depreciation of the current year 20,000. Then accounts payable is a current liability or current asset? Current liability. Less decrease in accounts payable. Decrease in accounts payable how much? 3,000. Decrease in accounts payable 3,000. Notes payable, there is no change. Common stock, there is no change. Retained earnings doesn't matter for us. When you work out, you will get which one? Cash from which activity? Operating activity. That is how much? 83,000. What is the answer? 83,000. Net income, gain on sale of equipment, no problem. Decrease in accounts receivable, we'll add because money comes in. Increase in inventory, money goes out, so minus. Depreciation alone, you have to be little careful and work out. Then decrease in accounts payable, work out panna, 83,000 we get. Whatever I done, this available. Depreciation expense, how much? 20,000. Cash flow from operating activities, how much? 83,000. Here also they ask you operating activity. What is the net income they have given? 2 million. Increase in accounts receivable, what will you do? Increase in current asset, we will minus. Decrease in current asset, you will add. Increase in accounts payable, current liability increases, money comes in. Depreciation expense, we will add. Gain on sale of available for sale securities, how much? Minus. Cash received from issue of common stock is not a operating activity. Cash paid for dividend. Please remember, we start with which one? Net income, so ignore this. For land we purchased, ignore this. Available for sale security, ignore this. So what is the answer? Net income, increase in accounts receivable, increase in accounts receivable, money goes out, so minus. Decrease in inventory, we get money. Increase in current asset, current liability goes up, you add. Depreciation expense, non-cash, we add. Eliminate gain on sale of equipment, we get it. What is irrelevant for solving? Issue of common stock is which one? Financing activity. Dividend paid is financing activity. Purchase of land is investment activity. This is also investment activity. 23 next. Indirect method of cash flow. Impairment of goodwill should be added back. Impairment is nothing but writing off non-cash item. We will what? Add back. Which one of the following would result in decrease in cash flow under indirect method? Decrease in income tax payable. Income tax payable is a liability. When liability goes down, money goes up. Decrease in current liability, minus. Depreciation expenses added back under indirect method to find out which one. Non-cash expenses that was deducted from net income, we add back to get cash flow. We deducted depreciation, we add back depreciation to get which one? Cash flow. Operating activity they ask. Net income is there. So 46,000 we deducted for depreciation expense, we will add back. Dividends, these things will not come. Then accounts receivable, last year to current year, decrease area. We will add how much? The
1,005.
accounts payable decreased minus 12,900, 10,745. How much decreased?
1,500.
155. Inventory increased, so minus. Inventory increased, so minus. How much?
960.
Adjust this, you will get. So 4,56,900. Add depreciation expense 45,600. Okay. Decrease in current assets we add. Increase and decrease in current liability we reduce. Increase in current asset we reduce. What is the answer?
204.
Add back depreciation. Okay. Add back decrease in accounts receivable, decrease in current asset. Okay. Less accounts payable decreased, we paid money. Minus current asset increased, we paid money. So 504,285. This is specifically on investing and financing activity. Go to this. They ask you questions about investing activity. What will come in investment activity? Purchase of another company stock, purchase of shares, investment activity. Dividend paid is financing activity. This is purchase of your own company shares also which activity? Financing activity. Buying back, treasury stock, financing activity. So what will come in investment activity? Outside investments, 3 lakhs. Question number 2 part. Accounts receivable decreased from 1,15,000 to 1 lakh கொடுத்திருக்காங்க. Accounts receivable decreased, which means we will add. How much we will add? 15,000 you will add.
Addition. There's a loss on land bank.
Dividends 0.05 shares, 2.8 million shares outstanding கொடுத்திருக்காங்க. The company did not declare and pay dividends of the last year. Current year they declared the dividend. Current year they declared the dividend is given to us. 2.8 million into 0.05 கொடுத்திருக்காங்க. They sold a truck with a book value of 7,000 for 5,000 cash கொடுத்திருக்காங்க. Reporting a loss of 2,000 கொடுத்திருக்காங்க. Paid interest to bond holders 7,80,000. Cash balance on 31st December last year and current year is given to us. They use indirect method of reporting net cash flow. What is the correct one?
2008 நம்ம net income minus loss in land. Indirect method.
Okay. Actually, the option confusing கொடுத்திருக்கான். Okay. Whether there is 1,30,000 financing section dividends. No, we just declared the dividend. We just declared the dividend, not paid the dividend. So this is not an answer. You have not paid the dividend. Okay. Accounts receivable decreased. We will add. Actually, we will add. So it is not deduction. So this is also not an answer. This is also not an answer. 5,000 from the sale of truck. 5,000 sale of truck in which section? Source inflow of funds 5,000 from the sale of truck in financing section. It will come in which section? Investment section. This is also not an option. What is the correct option? This loss on sale of asset will be added back to net income. Addition 2,000 for the loss on sale of truck. This is the correct option. Loss on sale of truck will be added back to what? Net income. It will be added back to net income. Question number 3 part. We purchased an asset for 5,000. We borrowed 10,000 from a local bank. Which activity?
Investment.
5,000 is investing activity. 10,000 is what? Financing activity. Purchase of asset, investment activity. Borrowing money, financing activity. 3 years ago, James company purchased at a cost of how much? 1 lakh. The stock was sold for 1,50,000. The result of transaction should be shown in investment activity as how much? 1,50,000. For how much you sold? So sale of investment 1,50,000. Sale of investment 1 lakh. Cash from investing activity, only investing activity part. Only these two. A. All others are related to financing and operating activity. Only the last two is related to which activity? Investment activity. They ask you to find out financing activity. What will come in financing activity? $7,20,000 is the answer. Question number 7. Total cash provided by operating activity plus investment activity plus financing activity. So this already we decided. How much what we'll do? Plus 15,000 we'll add back to which one? Net income we'll add back. Then dividend declared will not come. Dividend declared will not come. Truck sold in the 5,000 we will include in which activity? Investment activity. Investment activity in the this one.
Net income.
This will add with net income. We'll add with which one? Net income. Paid interest to bondholders. Paid interest to bondholders. Operating activity lower. But anyhow, this net mean indirect method we will not add or do anything. Ignore. We will ignore. Indirect method we will ignore. So the putting plus 15,000 plus 5,000 plus 2,000 plus 1,06,000 plus 1,06,000 minus 2,84,000. How much you get?
1,56,000. 5,000 cash from investment.
Accounts receivable decreased. So we will add.
Only 2,000.
This operating loss 2,000 you will add. This 5,000 also you will add. 15,000 plus 5,000 plus 2,000 plus 1,06,000 plus 1,06,000 minus 2,84,000. Why should we do all these things? The end result of all the three activities, difference in cash and cash equivalents. What is the opening balance of cash? What is the opening balance of cash? 1,06,000. What is the closing balance of cash? 2,84,000. The net result of operating, investment and financing activities, which one? Difference between opening and closing cash balance. So 1,78,000. 1,78,000. They don't ask you separately. They ask you operating plus investing plus financing activity. The main cash flow statement we could have seen, right? Difference between opening and closing balance is nothing but what? Net change in cash and cash equivalents. 1,78,000. All other things that doesn't matter. Kelly company acquired land by a assuming a mortgage full acquisition cost, the transaction will be recorded as which one? Non-cash financing activity. For example, I purchased an asset from you on loan. Did I pay or did I get money for loan? It's not a cash item, it's a non-cash item. Investing and financing activity. Investing and which one? Financing activity. This is investing activity. So financing activity, okay. Dividends paid financing activity separate plus minus. Financing activity plus minus. This will not come. Conversions will not come. Purchase of machinery, investment activity. Sale of buildings, investment activity. 2% dividend on common stock is which activity? Financing activity. Gain on sale of building will not come anywhere. So work out and tell me. 40 lakh plus minus 4 lakh minus 3 lakhs. How much you get? Investing first get or financing next get? No, dividend paid. Is it cash dividend or stock dividend? Stock dividend means it is not paid in cash, it is paid in the form of shares. This will not come, even this will not come. So 40 lakhs minus 4 lakhs, how much? 36 lakhs. 12 lakh minus 5 lakh, 7 lakhs. lakh minus 5 lakh, 7 lakh, 40 lakh minus 4 lakh, 36 lakhs. This dividend is not coming because it is not a cash dividend. This is which one? Stock dividend. Next. Payments. Financing section. Where this will come? This is part of operating activity. So answer is both are paid. 2 minus 2 minus 4, 6 lakhs. This is about which one? Cash flow statements. This is about which one? Cash flow statement.